As one of the world's leading international financial centers, Hong Kong's service-oriented economy is characterized by its low taxation, almost free port trade and well-established international financial market. Its currency, called the Hong Kong dollar, is legally issued by 3 major international commercial banks, and pegged to the US dollar. Interest rates are determined by the individual banks in Hong Kong to ensure it is fully market-driven. There is no officially recognized central banking system, although Hong Kong Monetary Authority functions as a financial regulatory authority. When destabilizing factors are hitting the financial market of Hong Kong, they will be monitored and inspected by the Hong Kong Monetary Authority, the financial regulatory agency in Hong Kong. Electronic finance trading is evolutionarily impacting the financial market of Hong Kong. According to Index of Economic Freedom, Hong Kong has had the highest degree of economic freedom in the world since the inception of the index in 1995. Its economy is governed under positive non-interventionism, and is highly dependent on international trade and finance. In 2009, Hong Kong's real economic growth fell by 2.8% as a result of the global financial turmoil. Hong Kong's economic strengths include a sound banking system, virtually no public debt, a strong legal system, ample foreign exchange reserves, rigorous anti-corruption measures and close ties with the mainland China. Despite the downturn, these strengths enable it to quickly respond to changing circumstances. It has the most efficient and a corruption-free application procedure, the lowest income tax, the lowest corporate tax, as well as an abundant and sustainable government finance. The government of Hong Kong consistently upheld the policy of encouraging and supporting activities of private businesses. Examples include the Cyberport and the Hong Kong Disneyland. This has a positive impact on the overall economic performance by removing unnecessary barriers for the private enterprises in the special administrative region. The Hong Kong Stock Exchange is a favorable destination for international firms and firms from the mainland China to be listed on due to Hong Kong's highly internationalized and modernized financial industry along with its capital market in Asia. Its size, regulations and available financial tools, which are comparable to London and New York. Hong Kong's gross domestic product has grown 180 times between 1961 and 1997. Also, the GDP per capita rose by 87 times within the same time frame. Its economy size is slightly bigger than Israel and Ireland, and its GDP per capita at purchasing power parity is the 6th highest globally in 2011, higher than the United States and the Netherlands and slightly lower than the Brunei. By the late 20th century, Hong Kong was the 7th largest port in the world and second only to New York and Rotterdam in terms of container throughput. Hong Kong is a full member of World Trade Organization. The Kwai Chung container complex was the largest in Asia, while Hong Kong shipping owners were second only to those of Greece in terms of total tonnage holdings in the world. The Hong Kong Stock Exchange is the 5th largest in the world, with a market capitalization of about $2.63 trillion. Hong Kong has also had an abundant supply of labor from the regions nearby. A skilled labor force coupled with the adoption of modern British or Western business methods and technology ensured that opportunities for external trade, investment, and recruitment were maximized. Prices and wages in Hong Kong are relatively flexible, depending on the performance and stability of the economy of Hong Kong. Hong Kong raises revenues from the sale and taxation of land and through attracting international businesses to provide capital for its public finance. Due to its low tax policy, according to Healy Consultants, Hong Kong has most attractive business environment within East Asia, in terms of attracting foreign direct investment. This has led to Hong Kong being the 3rd largest recipient of FDI in the world. From its revenues, the government has built roads, schools, hospitals, and other public infrastructure facilities and services. low levels of spending relative to GDP by having no spending on armed forces, minimal outlays for foreign affairs and modest recurrent social welfare spending have allowed the accumulation of very large fiscal reserves with minimal foreign debt. Though not conventionally regarded as a tax haven, Hong Kong ranked fourth on the Tax Justice Network's 2011 Financial Secrecy Index. Acting as a government of the Special Administrative Region, Hong Kong is the second highest-ranked Asian government in the World Economic Forum's Network Readiness Index, an indicator for determining the development level of a government's information and communication technologies. Hong Kong ranked 8th overall in the 2014 NRI ranking, up from 14 in 2013. Stock exchange. The Hong Kong Stock Exchange is the sixth largest in the world, with a market capitalization of about $2.97 trillion. In 2006, the value of initial public offerings conducted in Hong Kong was second highest in the world after London. In 2009, Hong Kong raised 22% of IPO capital, becoming the largest center of IPOs in the world. The rival stock exchange of the future is expected to be the Shanghai Stock Exchange. As of 2006, Hong Kong Exchanges and Clearing has an average daily turnover of $33.4 billion, which is 12 times that of Shanghai. Economic predictions. Since the 1997 handover, Hong Kong's economic future became far more exposed to the challenges of economic globalization and the direct competition from cities in the mainland China. In particular, Shanghai claimed to have a geographical advantage. The Shanghai municipal government dreamt of turning the city into China's main economic center by as early as 2010. The target is to allow Shanghai to catch up to New York by 2040 to 2050. Hong Kong, on the other hand, continues to have a more positive and realistic approach, and remains the principal international financial center in China. Until then, Hong Kong is expected to have higher overall economic figures yearly. Hong Kong's main trading partners are China, the United States, Japan, Taiwan, Germany, Singapore, and South Korea. Positive non-interventionism. Hong Kong's economic policy has often been cited by economists such as Milton Friedman and the Cato Institute as an example of laissez-faire capitalism, attributing the city's success to the policy. However, others have argued that the economic strategy is not adequately characterized by the term laissez-faire. They point out that there are still many ways in which the government is involved in the economy, some of which exceed the degree of involvement in other capitalist countries. For example, the government has intervened to create economic institutions such as the Hong Kong stock market, and is involved in public works projects, healthcare, education, and social welfare spending. Further, although rates of taxation on personal and corporate income are low by international standards, unlike most other countries, Hong Kong's government raises a significant portion of its revenues from land leases and land taxation. All land in Hong Kong is owned by the government and is leased to private developers and uses on fixed terms, for fees which are paid to the state treasury. By restricting the sale of land leases, the Hong Kong government keeps the price of land at what some consider as artificially high prices, and this allows the government to support relatively high public spending with a low tax rate on income and profit. Economic freedom. Hong Kong has been ranked as the world's freest economy in the Index of Economic Freedom of Heritage Foundation for 20 consecutive years. Since its inception in 1995, the index measures restrictions on business, trade, investment, finance, property rights and labor, and considers the impact of corruption, government size and monetary controls in 183 economies. Hong Kong is the only one to have ever scored 90 points or above on the 100-point scale in 2014 index. Economic indicators. GDP $1,633.5 billion. GDP, real growth rate, minus 2.7%. GDP per capita, $30,087. GDP composition by sector: manufacturing, 2.3%; finance, 25.0%; trade, 26.4%; other services, 34.7%; other sectors, 11.6%. Population 7.03 million, plus 0.6%. PA. Unemployment rate, 5.2%. Labor force participation rate overall, 60.3% male, 68.9% female, 52.9% age 15 to 24, 8.5% age 25 to 39, 36.8% age 39 plus, 43.7%. Labor force, 3.7 million. Employed, 3.56 million. Public administration, social and personal services, 24.8%. Finance, insurance and real estate, 18.3%. Retail, accommodation and food services, 15.7%. Import, export trade, 14.9%. Transport, communications and logistics, 12.6%. Other services, 10.6%. Other sectors, 3.1%. Average work week, 45 hours. Unemployed, 136,000. Underemployed, 67,000. FY 2010-11 budget. Operating revenues, $247.6 billion. Operating expenditures, $251.4 billion. Balance, $3.8 billion. Government debt, $11,227.5 million. Trade, two-way trade, $823.9 billion, plus 23.6%, plus 11.1%. PA. With China, $402.6 billion, plus 24.2%, 48.9% share. Exports, $390.4 billion, plus 22.7%, plus 10.8%. PA. To China, $205.7 billion, plus 26.5%, 52.7% share. Re-exports, $381.2 billion, plus 22.8%, plus 14.3%. PA. To China, $201.7 billion, plus 26.7%, 52.9% share. Imports, $433.5 billion, plus 25.0%, plus 11.3%. PA. From China, $196.9 billion, plus 22.4%, 45.4% share. Poverty. At least 100,000 persons live in cage homes in the poor districts of Hong Kong.